Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, December 10, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, to keep things simple, she basically had been riding the trend line, was summarily rejected by the trend line, is now pulling back in the neighborhood or toward the 20-period moving average and, by the way, the most recent breakout area, which is 600.17. Last night we called it 600 plus or minus. It's still 600 plus or minus. It could be the 20-period moving average, which is a spike of 600. They could come up short of 600. All can be true, but that's the next place that Mrs. Market seems to be heading. We discussed it last night. The thing holds true. We had today what's called in the trading parlance follow through. There will certainly be specific numbers around there from an intraday perspective. Inside the number members and live room members will be privy to those numbers. Speaking of numbers, you got to see this. For now, we're just taking a glance at the stock on the move list, and we're going to focus in on the middle two, FERG, Fergie or Ferguson, and Oracle. Stay with me, there's a method to the madness. Just for a moment, I want to focus on one number and one number only, 194.59. And the point is, when she got, meaning when Ferguson got down to this particular price area, not necessarily on the nose, but this price area. As you can see, there was a bull-bear battle. She bounced back in the other direction and bounced it back over 200, by the way, which is over a $5 bounce from that number, which is a little over 2.5%. But wait, there's more. There were other stock on the move numbers on the board, and they worked a different way. I just want to point something out. Let's take a look at the automagical calculator and see what she says. Now, here's a daily chart of Ferguson, and we're going to take a pivot high at 223.22. 223.22, we hit calculate, and she comes out with results. Now, if you go back to early this morning, Ferguson was opening up below this number. So the next number in the sequence was 194.34. The next number in the sequence was 194.34. Gave you a $5 bounce, automagical calculator. But wait, there's more. How about Oracle? Let's see if it works on Oracle. It was down big today. So we'll take the pivot high, 198.31. We'll go back to Mrs. Automagical Calculator and put in 198.31. We hit calculate, and magically we have numbers. So here's what we know already. Oracle was opening below 177.75. So the next number in the sequence leaves us at 171.15. That's what it looks like on a daily chart. And that's what it looks like on a 5-minute chart, 171.15. Low of day happened to be 171.06. Automagical calculator. Who wants access to this? So here's the way this is going to work. It comes in the MSF Master Class. It's part of the package. At least it was on this series, this go-around. It's going to be a standalone product. How do you put a price on this? Let me hear your comments below. How do you even price this thing? What's it worth to somebody that can use it? By the way, this isn't the way to use it. You don't just take the number and indiscriminately take a trade. It goes along with all the other stuff I teach, and this is part of the full stack building situation. Was Oracle in the neighborhood of a breakup candle low? Did that number come within a stone's throw of a breakup candle low? That's just one thing we add to create and build a full stack situation. Who wants in on the magic calculator? Back to the S&P for a moment. Was there any material change on the charts today? Not really. They're just in the process of doing the thing that we talked about, which is coming back to run a test of the most recent breakout area, coinciding with all that other stuff. Nobody should have a look of surprise on their face. Down $1.88, a third of 1%. It's just a red candle or down day in the midst of an uptrend. This weekly chart is in a solid uptrend, just overcooked, trader term, traderism, overcooked a little bit. Got to pull back down toward home base or go sideways for a while and let home base creep up to price. Home base is the 20-week moving average. What about inside the numbers? What was going on in there today? Question right out of the chute at 0 dark 30. Market was flat-ish. Are we going to see a DCB or dead cat bounce, or are we going to see further selling? Well, in order to know that, you need to know where they are relative to the pivot. 605.40 was our early pivot. It was, in fact, our pivot. Let's go see how 605.40 did in the spiders. Right of the vertical happens to be today's activity. First candle of the day, opening print, 605.37, high, 605.40 on the button, and she sells off from there. Rallies back to try and recapture 605.40. Can't do it for more than a few minutes. Sells off into the end of the day. The pivot is important to know. Do you know the pivot each and every day? I can tell you where to get it. Inside the numbers. As you can see, the flip side situation from the DCB is where they get below 604 and pay a visit and conduct a test of 603.40. Now, they went lower yet, and you'll notice that they basically ate time off the clock and bounced in front of 603.40, plus they did it into the end of the day. Nobody should be, and therefore, at least from my tutelage, nobody is taking this trade. The live room members had another number on the board. It was 602.55, I believe. And as you can see, that was basically the last stop for the day. On the 15-minute chart, they do have the appearance of some kind of bottoming situation. You had a 10-minute tail, a retrace, and a rocket ride into the end of the day from a short-term perspective. And the 30-minute chart from an intraday perspective also giving the appearance of a bottoming situation. The question by tomorrow morning will be, is it a fake-out situation? Since we had all the necessary numbers on the board long before the opening bell, you can see them reiterated here. By the way, there's your 602.55 at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the opening bell even rings. We always have to abide by or adhere to the manner in which, but this was cited as an early give or take zone of support for a bounce back situation. They happened to arrive there and put in those tail candles at the end of the day, so there's no time left on the clock. Pause the video, read the notes, go back to the charts to double check the work. It's all in here each and every day. Now we're back to stocks on the move, and we're going to take a look at Pins and Ferguson. Oracle, I was a little bit lower. Missed it by that much. This is what Pins looked like. You have a zone of support. They never got to the bottom end of the zone. They found support. They bounced it from the first number up here to a high of 32.37, providing the minimum required base hit, which is give or take around 1%. Base hits put you in the Hall of Fame. You never know which ones are going to give you the rocket ride situation. Here's what Ferguson looked like for stocks on the move this morning. So it's opening down here. Therefore, the first number's off the board. The second number's off the board. The only thing on the board would be the third number. Opening print was 195.74. 195.07 was the only number on the board at the opening bell, and therefore she spiked it, snapped back in the other direction. The high over here was, we'll say, 200.83, give or take. That's a nice bounce. Same $5 we were talking about before. Ferguson, Fergie. Now what's going on over in Camp IWM? She's into the 20-period moving average. You have a breakup candle low here at 235 and change. It's an important spot. Today's low is 235.92. She's basically teetering. There's a no man's land. Those of you that have participated in the masterclass series know about the gap window. That's a bull-bear battle type of place. From a leading market indicator perspective, she was down a touch more than the S&P, but not enough to make a federal case out of it. At the end of the day, IWM was down $1 today. No big deal. Now, here's an interesting one. First of all, the folks down at the transportation department are my second favorite market leading indicator, but they're my favorite canary in the coal mine. Something look a little different than everything else. They were up 123 points today, 0.7%, and you have what's called an on-time type of situation down at an important place. We talked about it already, not once, but twice, maybe 3 times. And you have a canary in the coal mine in the green, second favorite market leading indicator, up today 0.7%, on-time type of situation. Do we have a pullback in an uptrend across the other markets? Or is something developing into more and the transports are the fake out, not the other stuff? We'll see going forward, but this is the facts as we see them. We are an analyst. We are the umpire calling balls and strikes, and here's where we call it as we see it. Team Transports, positive day, canary-ish. Now, what about the Q people? Any revelation here? Down about 0.33%. $1.78, coming back to run a test of where? The most recent breakout area happens to be just below a gap. Need I say more? It's open season to get down there. They don't have to get down there. And if they do get down there, it's normal garden variety market activity. Jot that down on a sticky note. What about the XLF? They're playing a game of teeter. You see what happened at 49.90. It was overhead resistance today. They really need to get back above that price. They have time to do it, but if they don't do it, they will begin to leak away. And if they start to get all the way down here at 48.60 something, and they start to get below that, they're going to have an open door policy to get to the most recent breakout area, and they could also fill the gap down here at 46.70 in the process. That's a different kind of thing than finding support within pennies of 49.90, just looking into the abyss, not necessarily getting to or deep into the abyss. You do have some unfinished business down here with a gap at 49.19. The low here was 49.30, so they may want to fill that gap, and they could still fill that gap and maintain a bullish stance in an uptrend. Remember, the larger time frame dominates. They're just pulling back because they were overcooked. Another technical term, traderism, overcooked on the upside. They're just pulling back toward home base. That's the big picture scenario. There's really no harm, no foul, but if they get back down to home base, you can bet your bottom dollar that other markets will have selling already or will be selling real soon, and the character of the market will change. Right now, the character of the market really hasn't changed. It's a couple of red candles on the tape just yet. Well, stay on the weekly chart for Smashmouth, or SMH, the Philadelphia Semiconductor Index, because we want to accentuate where they are relative to the bottom trend line. So we go back to the daily chart and you say, oh, look, they had a $6 down day or 2.5%. They're a pretty good proxy for the tech space as a whole. So is this telling us something? We have Team Transports, which is my favorite canary in the coal mine, surely. They're up today, but a pretty good proxy for the tech space. The SMH is down today. Again, we need to play umpire calling balls and strikes, and we have diverging things going on. We're not going to say they cancel each other out. We're going to say we don't have a definitive anything. We need more information. Maybe the SMH just had to run a test of the lower portion of that triangle and will hold. But if it breaks below and starts scaling lower to run tests of lower stuff, what do you think's happening to the rest of the market as a whole? And it's unlikely it's going up. It's more likely that it was a fake out situation over in team transports. How do you like them apples? Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.